Lynn Franco is the director of the Conference Board Consumer Research Center who publishes this report, and she joins us now for a closer look at today's U.S. consumer confidence data and what it tells us about the economy. Lynn, thanks for joining us again.
You're quite welcome.
So Lynn, 68.1, what does that even mean?
It just means that we've been on a roller coaster ride, and we've gotten a nice bounce back. We're back where we were in February, back where we were sort of late December, and hopefully we'll gain some traction going forward. We're still not confident. We're still a long ways from 90, but at least we've moved in a positive direction.
Now, to give us some perspective, when was the index at 90, and what does 90 indicate?
Oh, we've got to go back several years, sort of pre-recession. So we're talking at least 5 to 6 years since we've been above 90, even above 100. And that's usually when consumers are very confident and the economy is growing at a very good clip.
So at 68.1, as you said, it was a bounce back. Are consumers ignoring the payroll tax hikes and the sequester, or do we expect that to appear in the future months, and we still expect some volatility with regards to this number?
Well, we've already seen a lot of volatility from the fiscal cliff, the payroll tax hike, the sequester. There could be further fallout from the sequester, so that's sort of the big unknown down the road. But at least for the time being, we've seen a little bit of a bounce back. We've seen income expectations recuperate. So hopefully in the next few months, we'll see confidence gain just a little bit of momentum so that we know we're moving in the right direction.
Now, is this income expectations or actual income?
Income expectations, but it was severely impacted by the payroll tax hike. So at least we've seen that subside. So hopefully some of the fear and trepidation that consumers were expressing has alleviated a little bit, and they'll be willing to spend in the future.
But are employers going to follow suit and really increase those incomes, or could consumers be in for a not so happy surprise there?
I think we're going to progress at a very slow pace, so we're not going to see a doubling in our paychecks, unfortunately. But as long as employment continues to grow, I think we'll begin to see some moderate increases down the road.
Now, focusing on employment, the current rate is at about 7.6%. We've got the jobs report coming out later this week. Is the unemployment rate of above 7.5% the new normal now? Are consumers just adjusting to this and our expectations have changed accordingly?
Well, I don't think consumers are really focused on a particular number, but more what's happening in the workplace. Are you getting overtime? Are there layoffs? Are there cutbacks? And that's what gives them sort of this sentiment about where the labor market is headed.
What about the U.S. GDP number? It came in at 2.5%. Economists had forecasted 3.1%. Is this also a number that consumers don't really pay attention to?
Well, what was interesting there was we saw a big boost in consumer spending, which we don't expect to hold out. However, I think the bounce back in GDP is similar to the bounce back we've seen in confidence. It's still lackluster readings, but it's still a bounce back.
Now, one of the positives that we've seen consistently is the U.S. housing market. U.S. home prices rose at their fastest pace in nearly 7 years in February. Is this one of the most significant factors behind the increase in consumer confidence?
Well, absolutely. In fact, our home purchasing intentions are way above where they were a year ago. And as consumers purchase homes, then they have to purchase durable to furnish those homes. So that helps fuel the economy, and I think it helps fuel confidence as well.
What about those that aren't homeowners? How does this factor with them?
I think it just shows that there's a little bit of stability and sort of a silver lining in the economy, and it signs that there is growth, though moderate.
Now, what's interesting is that of the 8 states tracked by the Conference Board, Texas and New York were the most optimistic, had the highest rate of consumer confidence. Why those 2 states in particular?
Well, in Texas, we see that, they're adding jobs at a
It's always bigger and better in Texas, right?
It's always bigger and better. They're adding more jobs than anywhere else, so that's always a bonus for consumer confidence. And they've held out very well. They've outpaced the nation for several years now. In New York, especially downstate, we're just seeing the rebound in the stock market, and that's helped fuel some of the optimism that we see here.
All very optimistic, but on the pessimistic side, what do you think could really derail confidence?
Well, it depends how the sequester plays out. It could have implications in terms of job, in terms of GDP growth.
I mean, so far people are saying sequester semester. Like, what's become of it other than a couple of delays in the airports?
Well, I think as it filters through the system, we'll see what may or may not happen. So that could sort of be a little bit of a dark cloud that hangs over consumers. But I think it'll be telling to see what happens over the next 3 months to see whether or not we can sustain the momentum.
And we know you will keep us updated on all of that. Thank you so much. Lynn Franco, Director of the Conference Board Consumer Research Center.